Hello, fellow traders. 'Tis I, the Rumpled One. Monday, April 1st, 2019. April Fool's Day. Let's talk trading. Let's not fool around. Horizontal lines, buy zone. I'm gonna talk about the buy zone this week, and next week we'll pick another zone, and we're gonna just keep going one method per week, showing you the details, maybe some of the finer details, even though there's not really many finer details, because this stuff is simple. It's all about horizontal lines, trading price in the direction it is crossing the line. Nothing more, nothing less, really. One thing we're not going to fool around with either is our money and risk management. It's a new month. We're going to get it right. Okay, let's take a look at the weekly chart here. You can see there are lots of unfilled gaps. So if you didn't take advantage yesterday, some of these trades, you've got a chance. You got plenty here. Plenty here. Now, also, heads up this week, we've got NFP coming on Friday, non-farm payroll. For those of you new to the game, high volatility during that time. So we can see the euro yen is in the upper wick zone. Now, weekly buy zone would be right here off the open. And we can see right here, see, let's change this back over to the 1 hour chart. Whenever you're ready, computer, here we go. You can see here there's a big gap up. When I opened my trading platform yesterday, I saw that without hesitation. I just shorted and I pocketed some here. You can see here, there's the pivot, there's the close. So we definitely have a short bias happening. You see, price moved up into the buy zone right here, somewhere in here. You should have taken profit. Got a second opportunity here in the buy zone. Take profit. Now, yesterday, when we were looking at this, I believe we only had a range of about 20, maybe 30 pips. I believe it was 30 pips at the time, if it was that. But the fact of the matter is, I showed you some of the frequency distributions, and you can see here, we don't have ranges. Actually, no, it was less than 30 because I was saying, you see, over the past 1,000 days, we didn't have any daily ranges under 30. And so when we look at the buy zone between here and here is 20. So we know price is going to stick out one or the other. If you set this, make this a box, you can't put a 30 pip stick into a 20 pip box. Just won't fit. It's going to stick out at one end, the other end, or both ends like it's done in this case. And so you can see right here, Larry live trade, time to get your shorts on. And that's the buy zone in action. Simple horizontal lines crossing. Here's the open. Open +8, open +10 long. You can see here, you'd say, oh, I got whipsawed. Well, did you? I mean, price is definitely going down here. So it came up, it came back, went through the open. You might as well just scratch that trade and wait for the next opportunity. You don't have to take the full stop. If you see prices going against you, especially here, there's a wick zone, price is exiting that wick zone, price exited this wick zone. You can see here price is exiting that wick zone. that wick zone. What's price doing? It's exiting the wick zone to the downside. I mean, once again, look at the candles. It exited the wick zone to the upside, didn't hold. Okay. Exited the wick zone to the upside, but you see, didn't hold. Didn't exit the wick zone that exited to the upside, didn't hold. So if you just look at the price action, you know, people always talk about price action in these forums and in the videos they make, but they never ever really define it. Price action's really simple. Either the current candle is going to exit the previous candle's high, go through it, or the previous candle's low, or do both, or do neither. That's all the price action it can be. Either price is going to go up, price is going to go down, or price is going to range in between the high and low of the previous candle. Okay, you see here we didn't quite enter short zone, so it didn't trigger, got really close. But it just missed it. Low 158, but it had to be 57.7. Just missed it. So if you jump the gun, you're now in drawdown. That's why you don't jump the gun. And not to mention here, you see price almost hit it, came back, but went through this lower wick zone, and now we're here. So, you know, you got this chart here, 5 lines. Don't even have to look over here. This is just how far price is from the open, how far price is from the pivot, and how far price is from the VWAP. Close minus open, close minus the pivot point, close minus the VWAP, or volume weighted average price, which is really a squiggly, but I just like to put the last value here. Maybe I shouldn't put the horizontal line. Maybe I should just cut it off at 1, but that would require additional coding, and I'm not going to mess with that at this stage of the game. So you see here we opened a new hour and we are moving up. Here's the open. Will price cross the open? Still has to hit this pivot point sometime. Doesn't have to, but usually that's what happens. Now, buy zone, that's the daily. We can also do it on the weekly. We can do it on the yearly too. So you see here, here's the year open. We're still below it. Been below it now. Let's see, 1, 2, 3, 4, 5, 6, 7 days we've closed below the yearly open. You can see here we opened above previous candle's midpoint, and that's a trigger to, that's usually a bias to go long. You see a long trade did pay off. We saw that before. Now we have crossed above February's open, crossed below it, and crossed back above it. Once again, trading that buy zone or that open cross proved to be profitable in both directions. And for those of you who like the 3-level ZZ, you can see here it's telling you to go long at the first line you encounter. Once again, 51 pip range, high minus low currently. That's what we're looking at. You can see here we exited the upper wick zone of the previous day, mainly focusing on the buy zone, but we use the wicks because that gives us some common sense. Okay, it gives us some way to look to see if we should exit the trade or possibly stay in. Just reading the wicks, nothing more. Once again, the pivot, you see we've got a missed pivot here, April Fool on us. We got a missed pivot here from Friday. So price may want to revisit these two. You can see here we have 2 from January that are still open And then there's a couple from last year that are still open. Wick zone, you can see we dipped in. Now we're coming back above. Why wick zones if we're talking about buy zones? Because normally you'll see it tomorrow. Today's open is going to be close enough to the previous day's close that the buy zone is going to be part of the wick zone. And we are looking here at the tick chart. You can see had a nice little run up here, about 5 or 6 pips so far, and price is continuing. And for those of you just tuning in, if you on your MT4 platform, if you hit the F9 key, you will see the tick chart. And the way I look at it is it's real simple. You see this valley of the ask. This is the ask. This is the bid. You see, price can't go up unless the bid goes above it. Okay. And now price can't go down unless ask gets below the peak bid. So that's what these are based on. So you can see here, here's the valley of the ask, peak of the bid. And you can see here we just crossed below. See if we get any selling. And you see we just got some selling, but then looks like we could get some buying right back. See here, nope, the ask did not go above the valley there. You see that? So that's how you don't get faked out. Now, does that work each and every time? Of course not. It's the market. It's just one little tool to help you, though. And you can see it right here. You see, we had all that buying, then we got some selling. The red right there, that is the peak of the bid. The green is the valley of the ask. And right now, you can see we're kind of in wait mode to see, will the ask cross above the valley or the peak of the bid? Or rather, will the ask cross below the peak of the bid, or will the bid cross above the valley of the ask? So we can just sit here and watch this for a minute or two. But this is basically a buy zone. It's the TRO Einstein indicator that you can download from the motherload. It just simply, you tell it how far away you want your trigger lines based on from the point you started. This is when I turned on the computer, or brought up this profile, I should say, right here. And so we are looking from this vantage point, is price up or down? You see we had a trigger. It was good for a couple of pips, nothing to write home about. So you had a second, or right here, and we had a second trigger here, pip or two. Now we're going the other way. You see we've got buying right there. Oh, that indicator just is the 2018 spread dots. Now, once again, some of these indicators come from 1 year, some come from different years. So if you make a donation, you don't get everything you see. You just get the year that you specify. And if you don't specify, you get the 2019s that I make for the rest of the year. But you don't have to do that if you don't want to. Oh, but I would like you to come down here, hit the subscribe button, and click on the bell. I only remember to say that about once or twice a month. And blank chart, tell me what you see. Range, once again, first day, 51 pips. Only ATR top. Range, half of it. You can see here, high to open to low. Take advantage of that price action. So there you have it. It's not what you trade, it's how you trade it. Now go out there and drain the banks.